I'd like to welcome Andrew Hoffman, Media Director for Miles Franklin, back to the Daily Coin, and it is a pleasure to speak with you again, Andy. How you doing?
Yes, Happy New Year to you and all your listeners.
Well, thank you. And this would not be possible had I not met you through Sean and SGT Report. So I thank you, Sean, for all that you've done for me and the Daily Coin. It is an honor to be a brother in arms with you, my friend. Almost 3 years now. I've been with Sean for almost 3 years, Andy.
And I have too. I've been in Miles Franklin a little more than 3 years, and we were working with Sean even before I started working there.
Yep. And I know he's been interviewing you for a very long time. And just before we started this call, you and I were talking about how the whole world seems to be going to hell in a handbasket this morning. And Zero Hedge released an article a couple hours ago, and with oil at 5-year lows, the WTI and crude both at cycle lows, when do you expect our food bill to go down? Because if you remember, we were being told that food is going up because the price of oil was getting so high. And what do you make of food prices going forward?
Well, I think the price of oil getting high is just one aspect of inflation
Yes.
that makes food prices go up. There's also shortages, there's population growth, there's all kinds of other inflation in the system from money printing. And then, of course, there's things like the droughts in California and Brazil. So there's many factors affecting foods, and all foods are not the same. Some foods right now are at record high prices, whereas rice, which is the most important food in the world, has been falling sharply. So each food has its own supply and demand fundamentals. And again, when you're talking about the impact of printing presses on commodities, it's a lot different for food than it is for industrial commodities. It's because what I wrote last week. I've been talking about what David Stockman's been saying all along: the Great Deformation. Over a period of, decades, but particularly the last decade, all of the incredible deformations of the economy, all the money printing has been funneled into productive capacity of oil, of mining, of steel, of copper, of home building, and all these things are in such massive gluts that, to me, forgetting hyperinflation, which is going to come at some point, and all bets are off, I think we're in a structural supply-demand imbalance for almost every commodity in the industrial world for maybe decades to come. And I'm serious when I say that. And I was an oil analyst for 10 years. There's not anything that's going to turn back the oil supply-demand imbalance, and there's nothing that's going to make OPEC cut, because they need desperately the money. These are socialist economies that use $100 barrel oil for their spending patterns, and they're certainly not going to let these upstart shale companies with high costs and massive high yield debt, take their market share. So I think when it comes to commodities in general, the trend is going to be horribly down and disruptive and deflationary for years. As far as food, well, some foods are going to go up and some are going to go down. But it's the kind of thing when people say, well, it's a tax cut for the economy if oil goes down. No, it was a tax cut in 2008 when oil and housing went down. It doesn't mean it's good for the economy. And it really doesn't matter if food prices of things go down. What's going to matter is you're going to have a massive, massive amount of bankruptcies and defaults across sovereigns, municipals, individuals, corporations, you name it.
Now, the other commodities are all being crushed this morning also. And do you is this just more of the same? As far as everything just going down, is 2015 going to be the year that we see things really start to unravel? There seems to be a lot of people thinking that.
I wrote several months ago. I wrote back in October, in early October, before the oil price plunge even really started. I wrote 2008 is back with one temporary exception.
Yes.
That exception being the PPT-supported stock markets that mask it. That was before the big oil crash, because it was so obvious that Europe was collapsing, Japan was collapsing, the Chinese bubble of real estate and construction and financing was collapsing, and shadow banking. That was back in early October. That was when oil was $80, $90 a barrel. I think it was $92 a barrel when I wrote that. And here we are today at $46 a barrel. We're down about 50%. The CRB commodity index, as I speak this morning, down 2%. It's 221. I think the low at the spike low bottom in 2008 was 200. So we're almost 10%, just barely 10% from the lows of the worst time ever. And
Jeez.
we're still supposedly in a recovery right now. I mean, right now, to me, the whole world has been in a massive recession for months and months and months. In some cases, it never ended. And the only difference was that in the United States, we goosed the stock market so high that we temporarily got some spending going in the high end sectors of the economy, but all at the expense of debt from the QE. And right now, it's all coming apart everywhere. It's not just oil. Oil is the biggest commodity. It's going to have the biggest impact. And the funny thing, when people say, "Oh well, the U.S. did it to hurt Russia, we will be hurt far more by low oil prices than Russia. They have almost no debt. That's why they're raising interest rates sharply to protect the ruble. We can't even raise interest rates 0.25%. We'll be at negative interest rates like Europe and Switzerland at some point soon. So the point is, this is collapsing now. It started months ago, not this second, and it's only going to accelerate. And that's why when people talk about 5% GDP growth, I mean it's just a pure lie. And the funny thing is, you had Friday this ridiculous NFP report again. I said beforehand, just look at the internals, and sure enough, 38-year low in the labor participation rate. You had falling wages. As it turns out, the actual amount of jobs in the BLS report was minus 65,000, but somehow they seasonally adjusted to plus 251,000. The point is, no matter how much they cook the books, we're talking about it's going to be early 2015, as in right now, where even the U.S. numbers start plummeting. I mean, most of the numbers have been plummeting. Industrial production, retail sales, durable goods orders, factory orders, those things have been going negative for the last 6 or 8 months. And now they're going to go in free fall. It is 2008 right now. And right now, the only thing that's left is, can they keep hold of the stock market? They've lost control of the commodity markets. I'm pretty sure that gold and silver have now permanently bottomed right now. And of course, they're losing control of commodities. And the worst part is they're losing control of currencies. I mean, I wrote months and months ago, the single most precious metal bullish factor imaginable is the crash in currencies and currency volatility that's caused at the end of your Ponzi scheme, when everyone flees like they did in 2008 into the most liquid asset, which is the dollar. That happened in 2008. The dollar is much higher today than even in the worst of 2008 because the whole world is falling apart. Everyone is discounting the end of everything right now, and how anyone could sit on their hands and not be protecting their assets with precious metals, and to get the heck out of paper assets as fast as they can is beyond me. I just read this last week. I read a quote from Jim Paulson, who said the U.S. stock market is now at the highest multiple it's ever been. And today I saw a chart that showed the U.S. stocks are now more overvalued relative to the rest of the world stock than ever in history either.
Yeah.
I mean, what part of PPT's support overvaluation and the coming printing press failures are people missing here?
Yeah, it's that one. I saw that as well, and that's pretty mind-boggling. The fact that the U.S. stocks are so much overvalued than the rest of the entire world. I mean,
Not that they can't be hyperinflated. For some time, as you said, I don't care much. I mean, I look at the Dow to see, frankly, I look to see how how the PPT is doing. Are they losing control? Not that I care about the valuation, because I know that they'll never stop. And the fact is, I've said for some time, the Dow is just as likely to hyperinflate, which is exactly what's been going on in places like Venezuela right now, where Venezuela, the country is collapsing, and the stock market has been soaring because of hyperinflation. So it's just as much a possibility in the long run that happens to the Dow. So I'm not even sure if the PPT will be swamped here and the Dow will plunge. But what is going to happen? You see gold right now is breaking out in pretty much every currency on the planet right now.
Yep.
And even in the dollar, it's starting to go up. But I mean, you look at Euro gold, Swiss gold. Oh my God, wait till you see when the Swiss people rebel. Russian gold, Indian rupee gold after all that last year. The rupee is back near its lows again. The yen gold is 5% from an all-time high. So, I mean, there are cataclysmic things going on in every market right now. And the only thing left in the powers that be's arsenal is, we must save the Dow Jones propaganda average. We can never let it go down. I mean, look at it right now.
yes,
It gets stopped as like clockwork at minus 1.0%, just like gold's rises get stopped at 1.0%. In fact, the Dow is sharply rallying now off
yes,
its lows. As I look at the oil price and CRB index at the lows of the day, down 4.5%. And gold is, of course, capped at plus $6. I mean, this is all they have left is naked short precious metals and buy stocks. But the fact is, they can't stop oil from plummeting. They can't stop commodities from plummeting. They can't stop interest rates from plummeting. And I wrote on Friday, I said we may have seen now, we'll never see a two handle on the 10-year yield until hyperinflation arrives. So I mean, it's all falling apart. And really, all they have left is just holding the stock market from keeping it from crashing.
Yep, that's all they've got. And let's look at Europe for just a second, Andy. And the I believe it's pronounced Syriza party in Greece.
Yeah, well, I don't know how it's pronounced, and that's what it looks like.
If they get elected and they're threatening to leave the euro, what effect will that have on the other PIGS nations, and in particular Spain, which, if I understand correctly, is the largest economy of the PIGS nations and has the worst unemployment of the five as well? Would Spain follow suit?
Well, first of all, Syriza is going to win. It's
Okay.
not even a question anymore. It's the polls; they're so far ahead; they're going to blow away everyone. And the 10-year Greek bond, it was up to 10.5 the other day. Now it's 9.5 because the ECB is meeting on the 22nd. What's that? A week from now, and they're definitely going to do QE, and they're going to buy. How is doing more QE and buying more bonds of bankrupt entities with the printing press going to change Greece's fate? It's not going to change their economy. It's not going to change their debt. It's not going to change the standard of living of Greeks. The Syriza party is taking over because, as I said 2 years ago, Greece is going to leave the euro. They were duped into taking hundreds of billions of euros of debt by Goldman Sachs, no less. They, of course, Mario Draghi's from Goldman Sachs. They taught them how to do it off balance sheet, and now the country's fallen apart, and they want out. And anyone says, well, there'll be pain if they get out. Well, of course there'll be pain, but it'll be more pain if they maintain being debt serfs and slaves forever. And you might as well take your pain right now and be independent. And then the same goes for all these things. Spain, are you kidding me? Remember Catalonia? They had their vote only 2 months ago. Catalonia is 25% of Spanish tax revenues. Catalonia voted 2 months ago, 81% to 4% to secede from Spain. And they're going to do it and take those revenues. And as you said, Spain, let alone Italy, which now is threatening to leave the euro as well. Yep. They're all going to leave. And anyone who says that it's going to be good for the euro is insane. It's going to be horrible. Everyone's going to, as soon as they see Greece, write off their debt. And literally the leader of Syriza, Serpis, just said on Friday, I want to write down all of the Greek debt, just like Germany did back during the war times. That's what they're going to do. They're going to say, we will only stay in if you write off hundreds of billion of our debt. And of course, euros won't do it. And so they're going to leave. And so then everyone will know that the Spanish are going to want to leave, and the Italians are going to want to leave, and the Portuguese are going to want to leave. And it's funny, the only people who don't want to leave are going to be the Scottish people who are lucky to have said no to seceding from the UK. They just stuck the UK with the bill for the North Sea because all that oil is in Scottish waters. So yes, that event with Syriza, January 25th, I think it's going to be an absolute horror show for Europe. I think the euro was doomed from the start, and it may well be 2015 where it finally splinters apart.
I think you're right, and from everything that I've read, it seems like that they are going to just plow right through. And what's the gentleman's name? Serpis. I think that he is going to stick to his word and pull them out of the euro, and that's going to be it.
I mean, that's the platform of the Syriza party.
Right.
They call it anti-austerity, but what it really means is anti-euro and pro-default. They want to start all over again. And you know what? I would do the same thing.
Exactly.
I mean, it's so insane. And in fact, is when you see all these idiots in the ECB and in Germany saying, well, it won't be, it'll be manageable. No, it won't be. The Germans alone, hundreds of billions of dollars of loans, just the German government to the Greek government, let alone the hundreds of billions of loans from German banks like Deutsche Bank to Greek banks. And of course, France has more loans out to Greece than anyone else. So, I mean, they're all going to go down. This is the exact same thing that happened in 2011-12, except it's much worse right now. That's the funny thing. I mean, that's the magic of derivatives and nonstop supporting of stock markets and trying to make people think that things are better. Things are 1,000 times worse. The economies of Europe are much worse than during that crisis when Draghi said whatever it takes 2.5 years ago. The debts are much worse. The social tensions are much worse. I mean, look what's going on in France right now. That's not an isolated incident. This is called a nation that's on the edge. That's why Marine Le Pen is going to be the next president of France, who, by the way, also wants to repatriate the gold and start buying more.
Okay, I like the sound of that. I'll have to dig into that and see what's going on over there. I want to change gears once again, Andy, and the Silver Institute is claiming there will be a 27% increase in the use of industrial silver by 2018. Mining operations, as you are well aware, are either slowing down or shutting down. Where in the world are we going to find 27% more silver over the next 3 years?
We're not. And of course, even though three-quarters or so of all the mined silver goes into industrial applications, that's not what has moved the price of silver over the years. Silver went from 4 to 50 purely because of investment demand. That's just icing on the cake. I mean, it's stable demand, the industrial parts. And as you said, and I know the article you're talking about, there's all these new uses coming out, which means that pretty much the industrial demand for silver at the worst isn't going to change much. It's going to be 500, 600 million ounces a year, whether you're in a recession or not, which leaves only about 100 or 200 million for the entire world's industrial investment demand. And that's why we've had so many shortages. We had them in 08 and 11. In 13, we had one last year, and 14 at the end of the year. And of course, we're going to run out. And, as what we said on our Miles Franklin All-Star Panel seminar, whatever you call it, we think that there's a good chance, because of what the cartel has done to the prices of gold and silver over the years, let alone the plunging base metal prices, where a lot of the silver is mined from, as byproduct, that, we could see in the next 2 to 3 years, not 10 years, of 25 to 50% drop in silver production. It's just not coming from anywhere anymore. Prices are way too suppressed. There hasn't been capex in years. And it's not like, well, people go, well, if the price of silver shoots to $30 right now, it won't matter. They haven't done anything for years. One of my predictions for this year is this is the year of complete and utter paralysis of the mining industry. We've already had it in the juniors. There's been no junior mining for years. I left that business 3.5 years ago, and it was strangled and dead back then. There's been no spending, no capex, no discoveries, nothing. And now the majors are under the gun, and wait till you see the write-offs that they do now that the year ended with these horrific prices, and they're going to all start merging, and their capex, which has already been cut 60%, will be cut even more. And there's no real new major developments out there. And when it comes to silver, again, 2/3 of the silver is byproduct from base metals and base metal mines. And right now, base metals are plunging too. So just like you saw in 2008. I mean, people forget 2008. Everyone goes, "Oh, Silver Wheaton, it's such an amazing company. It's got royalties." Silver Wheaton violated its covenants and almost went bankrupt in 2008 and 9 because the mines were starting to shut down, the base metal mines that provided their silver. And the same thing's going to happen here. And again, as I said in the beginning, base metal prices aren't going to go up. Base metal prices have nowhere to go but down, down, down. And that means less production of copper, lead, zinc, less production of silver. And of course, the primary silver miners, we're at $16 an ounce right now. And the price, they need $20 to make a profit, and they need $30 to actually expand their resources.
Yeah, I mean,
for some time, not for 1 minute. For years, they need it to be there.
Right. And do you think that Keith Neumeyer, do you think he's going to be able to pull off what he's calling for this year, as far as getting the dedicated silver mines to withhold stock? I mean, there's been some people that have said that
Neumeyer, he's a smart man. He's one of the only guys in the entire mining industry that has even addressed the most important aspect of his entire industry, the manipulation, let alone done something about it. But First Majestic is a very small player, and he only just stopped production of a teeny bit of production. Just that'll support his company. It won't really help the supply. What you really need is big players to do something, but they won't. For the same reason that the shale producers can't stop, the silver producers can't. They need the money. They're all in terrible financial condition right now.
Okay.
But the problem is that there's not an overcapacity. I mean, what happens is these silver miners who have no capacity coming on, they're just going to deplete away. They've been depleting away, and there's going to be nothing to replace the depletion of what they just sold. Whereas in shale, it's all lining up there. Anytime the price went up, people would sell. There's no capacity out there for silver. So yes, Keith Neumeyer is doing good things for his company, but as for the industry, it's going to have no impact. And I don't think any of the miners are going to hold back production because they are so desperate for cash right now.
Yeah, and they are unfortunately cash intensive operations, all of them. And this is kind of a follow on with silver. And according to the U.S. Mint in 2014, the gold silver ratio was 83.9, and that's sales. And currently, real world ratio in dollars is 74 and a half ounces of silver to 1 ounce of gold. According to Mother Nature, there's approximately 9.5 ounces of silver coming out of the ground for every 1 ounce of gold. Other than
Yeah,
manipulation,
yeah.
how can this disparity, according
Can't.
to the COMEX price, be explained?
No, there is no other way. I mean, it's that simple. And again, the 9-to-1 ratio coming out of the ground is a lot less than it used to be. The reason the historic gold silver ratio was 15-to-1 was because that's what it came out of the ground for centuries. But silver has been depleting far more rapidly over the years, and now it's down to 9-to-1. And of course, the other aspect is, unlike gold, all the silver inventory is gone. There was literally no more than 2 billion above ground ounces of silver out there in investable form. And of that, most of it is like yours and mine, not for sale.
Right.
So again, that's why this Achilles heel of the whole financial world, why they have to attack it so viciously and make it so volatile and make people so scared of it. But the fact is, you had record demand in 2013. You had record. I'm talking about global record demand in 2014. You had probably in 2014 the greatest amount of silver investment versus gold investment probably ever in any single year ever. And yet they were still able to get the paper price to go down, silver, and amazingly the gold silver ratio. And then anyone who's out there's a propagandist will say, well, it's down because it's deflation. Everyone's scared of a recession. Well, yeah, but gold and silver have been the best assets during deflations ever. And of course, if really people were, the quote markets were afraid of deflation, well, why the heck are the stock markets at all-time highs? Everything is manipulated. Probably no market is more manipulated on the planet than silver. It's even more than the Dow Jones propaganda average, and even more than gold. But of course, that's why we hold the physical and we sit here and wait. Of course, we're going to have massive shortages of silver. We've had them again. We had them in 2008, 2011, 2013, 2014. And at some point, we're going to have another big one, like a 2008 style. And that'll be it. You'll never see prices like this ever again, even remotely. It'll have what I call the ultimate quadruple top breakout at $50 per ounce. And it'll keep going from there, and it'll never look back.
Well, I like the sound of that. And the last thing I'd like to ask you about, Andy, and I'm going to let you go, is premiums. What's happening with premiums right now? Are they stabilizing? Are they going up? Is there any 90% silver available? What's happening with the Miles Franklin customer market?
Well, I would say generally speaking, I mean, sentiment has been as bad as we've seen it. I mean, the industry, I've written about this forever. The industry has been in dire straits for the last few years. Now, Miles Franklin is probably doing better than most, I think, in large part because of our visibility and our honesty. We're in our 26-year business and our competitiveness and, our A+ Better Business Bureau rating, all that. And of course, our Brinks facility. But generally speaking, I mean, sentiment hasn't been this bad in the 3.5 years I've been here. And it's frankly, it hasn't been this bad, that I can remember, even in the bottom in 2008. But that's just here in the West. In the East, we're talking about record buying. Certainly, it never stopped. India, China, all record levels last year. Now, of course, that Japan and Europe are joining with their currencies collapsing, and lots of South America and Russia with the record gold price. Yen price gold is about to hit an all-time high. It's only a matter of time when it reawakens here in the West. And again, remember, aside from this weakness here in Western sentiment, U.S. Mint and Royal Canadian Mint silver sales for 2013 were records, and 2014 were records again. So it's the East that have been buying up the West. We're just waiting for the West to catch up. So right now, premiums are stable. I mean, they're about where they've been, I would say, the average the last few years. But it's only a matter of time when the next big surge in demand comes, and the premiums and the prices soar.
What's going to create that surge?
I mean, it should be what we're seeing right now. I mean, look at
Should
oil
be.
broke through 46. The whole world's falling apart. The CRB index is falling apart. The Russian ruble is falling apart. Europe's falling apart. Our economic data is on the verge of complete implosion, no matter what the BLS and the BEA puts out. It's just I say a matter of time. It's a matter of, like, in market terms, hours, minutes, days. I mean, this isn't going to last long. Everything is falling apart, and people are going to start protecting themselves like Westerners in Western Europe and Japan are. Soon it's going to be Americans that are going to join this party, and the dollar and gold and silver will explode in dollar terms. It's only a matter of time, short time.
I would have to agree. I think that time is running short. And speaking of which, our time is running short here, Andy. And why don't you tell people how to get in touch with you?
Yes, milesfranklin.com. Miles Franklin, one of the largest bullion dealers in America, been around 26 years, 800-822-8080. And you can always email me at ahoffman@milesfranklin.com.
Thank you so much. And Andy, I really appreciate all your time this morning. And I want to do this again a lot sooner than we did last time I spoke with you on an individual basis back in July. And I can assure you it'll be a lot sooner than that, my friend.
Well, I look forward to it.
Well, all right. Well, you have a good afternoon, and I will talk with you soon.
Thanks a lot.
All right. Bye-bye.